Question 1. Which of the following is the most accurate way to assess the eligibility of an applicant in the underwriting process? A. Reviewing only the applicant's medical history. B. Assessing both qualitative and quantitative risk factors, including occupation and lifestyle. C. Only focusing on the applicant's credit score. D. Evaluating the location of the applicant's property in isolation. Answer B. Assessing both qualitative and quantitative risk factors, including occupation and lifestyle. Explanation. Underwriting requires a holistic approach to assess an applicant's eligibility for coverage. The risk assessment involves both qualitative, subjective factors such as occupation and lifestyle, and quantitative, objective factors such as medical history and claims history criteria. By combining both types of data, underwriters accurately assess the level of risk presented by the applicant. Focusing only on one type of risk factor, like credit score or property location, would fail to provide a comprehensive view of the risk. Question 2. Which of the following would an underwriter most likely consider when evaluating a property for insurance coverage? A. The applicant's previous claims history, but not the construction materials of the property. B. The property's location, including its proximity to a fire station, flood zones, and natural disaster risk. C. The applicant's income, but not the property's condition or value. D. Only the structural integrity of the building, ignoring other location-based factors. Answer B. The property's location, including its proximity to a fire station, flood zones, and natural disaster risk. Explanation. For property insurance, an underwriter evaluates several factors to determine the risk level, including the location of the property, proximity to fire stations, the risk of flooding, and exposure to natural disasters, e.g. earthquakes, hurricanes, all significantly impact the property's risk profile. The construction materials of the property also play a role, but the location-related risks are considered primary factors in assessing potential coverage and pricing. Question 3. Mr. Thomas is applying for a property insurance policy for his home located in a flood-prone area. His property is made of brick and has not experienced any prior claims. During the underwriting process, the underwriter discovers that Mr. Thomas has a history of heart disease, but this is not considered relevant to the property insurance policy. Based on the underwriting guidelines, what should the underwriter most likely do next? A. Approve the policy immediately since there is no claim history. B. Deny the policy based solely on the location's flood risk. C. Consider offering coverage with higher premium due to the flood risk while excluding certain damages. D. Reject the application outright based on the applicant's medical history. Answer C. Consider offering coverage with a higher premium due to the flood risk while excluding certain damages. Explanation. In this scenario, the underwriter must focus on the property-related risks, particularly the flood-prone location. Since Mr. Thomas's medical history is not relevant to property insurance, it should not be used to assess his eligibility. Instead, the underwriter should offer the policy with an appropriate adjustment to the premium. On the high risk of flooding, the policy may also include exclusions for flood damage to mitigate the insurer's exposure. This approach follows underwriting guidelines that balance risk and pricing in a reasonable manner, ensuring fair treatment of the applicant while managing insurer risk. Question 4. Which of the following best describes the role of underwriting in the risk management process for insurers? A. Underwriting is solely responsible for setting premium rates based on market conditions. B. Underwriting ensures that policies are issued only to low-risk applicants, effectively controlling risk exposure. C. Underwriting's role is limited to determining eligibility for specific insurance types, with no impact on risk exposure. D. Underwriting works primarily to identify fraudulent applications, with little concern for the actual risk involved. Answer B. Underwriting ensures that policies are issued only to low-risk applicants, effectively controlling risk exposure. Explanation. Underwriting is crucial in managing the overall risk exposure of the insurance company. It involves assessing the applicant's risk profile by evaluating factors like health history, property condition, occupation, and more. The primary goal is to issue policies only to applicants whose risk level aligns with the insurer's risk tolerance, thus controlling overall risk exposure, while underwriting also considers fraud detection. Its main responsibility is managing risk. Premium rates are influenced by underwriting decisions but are not solely determined by it. Question 5. In the context of property insurance underwriting, which of the following factors would most likely lead to a policy exclusion for a property? A. The property has a low crime rate in the surrounding area. B. The property is located in a region with a high risk of natural disasters such as floods or earthquakes. C. The property is made of brick and well maintained. D. The property owner has never filed an insurance claim. Answer: B. The property is located in a region with a high risk of natural disasters such as floods or earthquakes. Explanation: when underwriting property insurance, underwriters assess various risk factors and properties in high-risk areas, e.g., flood zones. Earthquake-prone regions are more likely to be subject to exclusions or higher premiums. These risks increase the likelihood of large claims, and as such, underwriters may exclude certain damage, such as flood or earthquake damage, from the policy coverage to mitigate potential financial loss. The other factors, crime rate, property condition, claims history, are less likely to lead to policy exclusions but may influence premium rates. Question 6. Which of the following is a significant difference between life insurance and health insurance underwriting? A. Life insurance underwriting focuses mainly on medical conditions, while health insurance underwriting considers lifestyle factors such as smoking and drinking. B. Life insurance underwriting takes into account an applicant's medical history, occupation, and lifestyle, whereas health insurance underwriting focuses exclusively on family history. C. Life insurance underwriting involves assessing the applicant's ability to pay premiums, whereas insurance underwriting evaluates pre-existing conditions in detail. D. Life insurance underwriting considers medical history and occupation, while health insurance underwriting places more emphasis on age and medical costs. Answer: D. Life insurance underwriting considers medical history and occupation, while health insurance underwriting places more emphasis on age and medical costs. Explanation: Life insurance underwriting generally focuses on assessing an applicant's overall health through their medical history and occupation, as some jobs may present higher risks, along with other lifestyle factors like smoking or alcohol consumption. In contrast, health underwriting places more emphasis on age, as this directly impacts medical costs and considers pre-existing medical conditions in greater detail. For health insurance, the financial aspect of healthcare needs is a primary factor, as insurers must estimate future costs related to coverage. Question 7. A company wants to purchase commercial property insurance for its new office building. The underwriter considers the location of the building, the size, and the type of operations conducted there. Which of the following factors would be most likely to impact the underwriting decision for this policy? A. The building's proximity to a major highway and the type of office furniture used. B. The company's claims history and whether the company has implemented fire prevention measures. C. The location's average yearly snowfall and the company's monthly operating expenses. D. The building's age and whether the company has any seasonal employees. Answer: B. The company's claims history and whether the company has implemented fire prevention measures. Explanation: when underwriting commercial property insurance, underwriters assess the risk level based on the building's characteristics in its location, the company's claims history indicating potential risk based on past losses, and the existence of fire prevention measures which reduce the likelihood of fire damage, are significant factors in the underwriting decision. These elements directly impact the risk associated with insuring the property. The other factors, such as office furniture or seasonal employees, are less likely to influence the underwriting decision. Question 8. Mr. Lee, a business owner, is seeking commercial auto insurance for his delivery vehicles. The underwriter is reviewing the operations of his business and the type of vehicles used. Which of the following factors would most likely influence the underwriter's decision regarding policy pricing? A. The number of vehicles used by Mr. Lee's competitors in the same industry. B. The types of goods Mr. Lee delivers and the average distance traveled per day. C. The insurance premiums paid by Mr. Lee's family members for their personal vehicles. D. The type of business Mr. Lee operates, excluding the vehicles involved. Answer: B. The types of goods Mr. Lee delivers and the average distance traveled per day. Explanation: in commercial auto insurance underwriting, the nature of the business operations and the specifics of vehicle usage are critical. The types of goods being delivered, e.g., hazardous materials or perishable goods, and the distance traveled daily are key factors that influence risk levels. These factors determine the likelihood of accidents or damage occurring, directly affect pricing. The premiums paid by family members or the number of competitors' vehicles are not relevant to the underwriting decision. Question 9. Which of the following is a primary responsibility of an underwriter when it comes to ethical considerations in the underwriting process? A. Ensuring applicants are offered the lowest possible premiums, regardless of the risk. B. Providing applicants with a detailed breakdown of their personal medical history during the underwriting process. C. Avoiding discrimination based on personal characteristics such as race, gender, or age when making underwriting decisions. D. Using any available data to approve or deny applications without consideration of privacy concerns. Answer: C. Avoiding discrimination based on personal characteristics such as race, gender, or age when making underwriting decisions. Explanation: ethical considerations in underwriting are vital to ensuring fairness and compliance with regulations. Underwriters are required to avoid discrimination based on personal characteristics such as race, gender, or age. Decisions should be based on relevant risk factors such as health history, occupation, or property location without bias. Privacy concerns must also be respected, and applicants' personal information should be handled in accordance with data protection laws. Offering the lowest possible premiums or disclosing applicants' personal medical history violates ethical standards and regulations. Question 10. Which of the following is the primary benefit of using predictive modeling tools in the underwriting process? A. To ensure that premiums are always equal across all policies, regardless of risk factors. B. To predict the likelihood of claims based on historical data and adjust underwriting decisions accordingly. C. To eliminate the need for any manual underwriting by relying entirely on automated decisions. D. To prioritize applicants based solely on their ability to pay premiums without considering risk. Answer: B. To predict the likelihood of claims based on historical data and adjust underwriting decisions accordingly. Explanation: predictive modeling tools use historical data and statistical techniques to estimate future outcomes such as the likelihood of claims. This allows underwriters to make more informed decisions by adjusting pricing and coverage based on the predicted risk level. The goal is not to standardize premiums across all or eliminate manual intervention, but to refine underwriting decisions by considering the data-driven predictions. This method helps ensure more accurate risk assessments, leading to fairer and more competitive pricing. Question 11. Which of the following statements best explains the role of claims history in underwriting property insurance? A. Claims history is irrelevant to the underwriting process since every applicant is treated equally. B. A history of multiple claims suggests a higher risk profile, which may lead to higher premiums or policy exclusions. C. A claims history is only considered if the applicant has experienced damage within the last year. D. Claims history is used exclusively to determine the applicant's ability to pay premiums. Answer: B. A history of multiple claims suggests a higher risk profile, which may lead to higher premiums or policy exclusions. Explanation: claims history is a significant factor in underwriting because it helps insurers assess the likelihood of future claims. Multiple claims, especially within a short period, indicate higher risk. Insurers may adjust premiums or exclude certain coverages to mitigate potential losses. Question 12. When an underwriter considers a property's construction type, which of the following features is most likely to influence the underwriting decision? A. The number of floors in the building. B. The presence of sprinkler systems and fire-resistant materials. C. The proximity to major urban center. D. The number of tenants occupying the building. Answer: B. The presence of sprinkler systems and fire-resistant materials. Explanation: the construction type, including the use of fire-resistant materials and safety systems like sprinklers, directly impacts the property's vulnerability to damage, particularly from fire. These factors help underwriters assess risk and influence the policy's terms, including premiums and coverage limits. Question 13. How does an underwriter evaluate the risk of a business in an industrial area? A. By reviewing the size of the business and its revenue only. B. By considering the fire risk, environmental hazards, and compliance with safety standards. C. By assessing the number of employees working in the business. D. By only focusing on the location and ignoring the type of business operations. Answer: B. By considering the fire risk, environmental hazards, and compliance with safety standards. Explanation: businesses located in industrial areas often face higher risks, such as fire, chemical spills, and accidents related to heavy machinery. Underwriters assess these factors along with safety measures to determine the overall risk and adjust the policy terms accordingly. Question 14. Which of the following is an example of a moral hazard that an underwriter might encounter? A. An applicant who has a history of fraudulent claims. B. A homeowner who installs a security system after a break-in. C. A business owner who regularly conducts fire drills with employees. D. A car owner who drives safely and obeys all traffic laws. Answer A. An applicant who has a history of fraudulent claims. Explanation: a moral hazard arises when an applicant's behavior increases the likelihood of a loss due to dishonest intentions. Fraudulent claims are a prime example of moral hazard as they represent a deliberate attempt to exploit insurance for personal gain. Question 15. Which of the following best describes the role of risk classification in the underwriting process? A. It involves determining how much an applicant can afford to pay in premiums. B. It involves grouping applicants into categories based on shared risk characteristics to determine appropriate coverage and pricing. C. It involves creating identical premiums for all applicants in a specific geographic region. D. It involves determining whether or not an applicant is eligible for insurance coverage. Answer B. It involves grouping applicants into categories based on shared risk characteristics to determine appropriate coverage and pricing. Explanation: risk classification is a key part of underwriting where applicants are grouped based on shared characteristics, e.g. health, occupation, property type, that influence the level of risk they present. This helps insurers set appropriate premiums and coverage limits. Question 16. What is the primary purpose of a physical inspection in the underwriting process? A. To evaluate the applicant's creditworthiness. B. To assess the physical condition of the property and identify potential hazards. C. To determine the market value of the property for pricing purposes. D. To verify the applicant's identity and personal background. Answer B. To assess the physical condition of the property and identify potential hazards. Explanation: a physical inspection allows underwriters to evaluate the property's condition and identify any potential hazards that could affect its risk level, such as structural issues, safety hazards, or outdated systems. This helps determine coverage terms and premium rates. Question 17. What impact does the location of a property in a flood zone have on its property insurance underwriting? A. The underwriter will automatically deny coverage for properties in flood zones. B. The underwriter may exclude flood coverage or offer it a higher premium based on the risk. C. The underwriter will provide coverage without any additional premium for flood risk. D. The location will have no impact on the underwriting decision for flood coverage. Answer B. The underwriter may exclude flood coverage or offer it a higher premium based on the risk. Explanation: properties in flood zones face an increased risk of flood damage. As a result, underwriters may exclude flood coverage from the policy or offer it as an optional endorsement at a higher premium to account for the increased risk. Question 18. In commercial property insurance, which of the following factors would most likely lead to a policy being cancelled or non-renewed? A. A change in ownership of the property. B. The property is located in a high-traffic area. C. The business has expanded its operations without notifying the insurer. D. The property has been renovated to improve safety features. Answer C. The business has expanded its operations without notifying the insurer. Explanation: changes in the scope of a business's operations, e.g. expanding the size or nature of operations, can increase risk. If the insurer is not notified, the coverage may no longer align with the actual risk, potentially leading to cancellation or non-renewal of the policy. Question 19. Which of the following would be an example of a physical hazard considered during underwriting? A. An applicant's history of making late premium payments. B. A business using outdated equipment that poses an increased fire risk. C. An applicant's credit score, which influences their ability to pay premiums. D. An applicant's involvement in high-risk hobbies like skydiving. Answer B. A business using outdated equipment that poses an increased fire risk. Explanation: a physical hazard is a characteristic of the property or operations that increases the likelihood of loss. Outdated equipment in a business that increases fire risk is an example of a physical hazard that an underwriter would assess. Question 20. In underwriting automobile insurance, which of the following factors is most likely to lead to higher premiums? A. A clean driving record with no claims. B. The applicant's driving history, including traffic violations and accidents. C. The applicant's choice of car with high safety ratings. D. The applicant's occupation if it involves low-risk driving. Answer B. The applicant's driving history, including traffic violations and accidents. Explanation: driver's history of accidents and traffic violations indicates higher risk, which often leads to higher premiums. Underwriters use driving records as key factor in assessing the likelihood of future claims. Question 21. Which of the following actions can an underwriter take when the applicant is determined to be high risk but still eligible for coverage? A. Offer coverage with exclusions or higher deductibles. B. Automatically reject the application. C. Offer a policy with the same premium as low-risk applicants. D. Provide unlimited coverage at a standard price. Answer A. Offer coverage with exclusions or high deductibles. Explanation: an underwriter may offer coverage to high-risk applicants with modifications such as exclusions, e.g. excluding certain types of damage, or higher deductibles to offset the increased risk. This ensures the insurer's exposure is minimized. Question 22. What role does reinsurance play in the underwriting process? A. It allows insurers to offer policies with unlimited coverage limits. B. It helps insurers manage the financial risk associated with large claims or catastrophic losses. C. It ensures that applicants can always receive coverage regardless of risk. D. It allows insurers to increase premiums for high-risk applicants. Answer B. It helps insurers manage the financial risk associated with large claims or catastrophic losses. Explanation: reinsurance allows insurance companies to transfer part of their risk to other insurers. This helps manage the financial impact of large claims or catastrophic events, ensuring the insurer can remain solvent and continue to offer coverage. Question 23. Which of the following factors is most likely to affect the cost of workers' compensation insurance? A. The company's location in a rural area. B. The number of employees and their job classifications. C. The business owner's credit history. D. The size of the business's office building. Answer B. The number of employees and their job classifications. Explanation: workers' compensation premiums are largely based on the number of employees, their job roles, and the associated risks with those roles, e.g. office workers versus construction workers. High-risk jobs will increase the premiums. Question 24. In property insurance underwriting, which of the following would be considered a moral hazard? A. A property owner who installs a high-quality alarm system. B. A homeowner who purposely sets a fire to collect insurance money. C. A business owner who maintains their property in excellent condition. D. A homeowner who lives in an area with frequent wildfires. Answer B. A homeowner who purposely sets a fire to collect insurance money. Explanation: a moral hazard involves deliberate actions that increase the likelihood of a loss, such as intentionally causing a fire to collect insurance payouts. This is a classic example of fraud and is a significant concern in underwriting. Question 25. When underwriting an auto insurance policy, which of the following is most likely to reduce the premium amount? A. The vehicle is used for commercial purposes. B. The vehicle has advanced safety features like anti-lock brakes and airbags. C. The driver has a history of accidents. D. The driver's car is in high crime area. Answer B. The vehicle has advanced safety features like anti-lock brakes and airbags. Explanation: vehicles with safety features such as anti-lock brakes, airbags, and crash sensors are less likely to be involved in accidents or suffer severe damage. This reduces the insurer's risk, which can lead to low premiums. Question 26. When underwriting a commercial property policy, which of the following would an underwriter most likely assess to determine the risk associated with business interruption? A. The geographical location of the property. B. The building's construction materials and design. C. The business's disaster recovery plan and its reliance on critical operations. D. The number of employees working at the business location. Answer C. The business's disaster recovery plan and its reliance on critical operations. Explanation: business interruption coverage considers how essential the business's operations are and how quickly it can recover from disruptions. Well-defined disaster recovery plan that addresses key operational dependencies is crucial for determining the risk and ensuring proper coverage. Question 27. What is the impact of an applicant's credit score on the underwriting process for personal lines insurance? A. Credit score has no impact on underwriting decisions for personal lines. B. Higher credit score may result in low premiums, while lower score can increase premiums due to perceived financial instability. C. Insurers cannot consider credit scores when underwriting personal lines insurance. D. Only applicants with perfect credit score are eligible for personal lines insurance. Answer B. A higher credit score may result in low premiums, while a low score can increase premiums due to perceived financial instability. Explanation. Credit scores are often used as a factor in underwriting personal lines insurance, such as auto or homeowners insurance, because they are statistically linked to the likelihood of filing claim. Higher credit score may indicate lower likelihood of claims, leading to lower premiums, whereas lower score associated with higher risk and may result in higher premiums. Question 20. Which of the following would an underwriter consider a moral hazard when underwriting a life insurance policy? A. A policyholder with a healthy lifestyle and no history of medical issues. B. A policyholder who regularly engages in extreme sports and activities with a high risk of injury. C. A policyholder who has a job in a low-risk industry such as accounting. D. A policyholder who works from home and rarely travels. Answer B. A policyholder who regularly engages in extreme sports and activities with a high risk of injury. Explanation. Moral hazard refers to a situation where the behavior of the insured increases the likelihood of a claim or loss. In life insurance, a policyholder who regularly engages in high-risk activities, e.g. extreme sports, poses a higher risk of injury or death, which could lead to a claim. This is seen as immoral because the insured is intentionally increasing their risk. Question 29. How does the use of an automated underwriting system improve the efficiency of the underwriting process? A. By removing all human intervention in underwriting decisions. B. By speeding up the process and reducing errors in policy issuance. C. By automatically denying high-risk applicants based on location. D. By only offering standard policies without flexibility for customization. Answer B. By speeding up the process and reducing errors in policy issuance. Explanation. Automated underwriting systems help streamline the underwriting process by analyzing data and making quick decisions, reducing human error and providing consistent results. While human underwriters still make final decisions, significantly improve speed and accuracy, enhancing overall efficiency. Question 30. Which of the following would an underwriter most likely require for a commercial property with a history of multiple claims? A. A discount on premiums to retain the business. B. A higher deductible and or additional risk management measures. C. A policy with fewer exclusions for higher coverage limits. D. A reduction in the policy's coverage limit to low premiums. Answer B. A higher deductible and or additional risk management measures. Explanation. For a commercial property with a history of multiple claims, an underwriter may require higher deductibles to reduce the insurer's exposure to risk. Additionally, the business may need to implement additional risk management measures, e.g. installing sprinkler systems or improving security to reduce future claims.